Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today's Wednesday, September 13th, 2006. The markets just closed, and it was another positive day for the bulls here. We're looking at the Nasdaq 100 Trust, the QQQQ. And as I had laid out in an earlier post, just an idea of the fact that we're coming up to a potential level of resistance. Now, it doesn't mean that's where the market will slow down. However, when you have a lot of different technical conditions that would ordinarily bring out sellers or cause buyers to slow their purchases, it becomes more important. And I laid out three reasons why I think, basically $40 to $40.30 or so is an area where there's going to be the potential for supply as well as buyers kind of getting less aggressive here. Number one, we're going to take a look at this declining 200-day moving average. That's right at about $40.15 or so, $40.12. If we take the highs from the April April before the sell-off, and that's really the move. That's when the high of the move occurred. Is this April level up in here to the July lows, and we take a Fibonacci retracement. Well, 1/3 will get us right up to this level. Here's the 50% retracement, and the 61.8 or about 2/3 retracement comes in at about $40.20 or so. The third reason is that we had this prior level of resistance right here, and this level is at $40 even, and that occurred back on June 2nd. So it doesn't mean that, and today's high was $39.98, by the way. It doesn't mean the market will or has to slow down. It could keep going higher. We're going to focus our action on price. However, after a big rally like we've seen over the course of 3 days, we've got options expiration on Friday. I think it's just going to be prudent to kind of slow down in here a little bit and tighten up your stops and your long positions and not be as aggressive on the long side. That's all that means. It doesn't mean rush out and sell short by any measure because the trend is clearly still higher. Once we take all this stuff off here, what you see is a market in an uptrend, and that's exactly what we have. We have a market that's making higher highs and higher lows, and it's not just in the Qs. Same thing in the semiconductors. In the semiconductors, a lot of times lead the rest of the market, and they certainly have been recently. But we can take the same June 2nd high right here. That occurred, just under $35 a share in the SMH. We can also take the high of April and draw in Fibonacci down towards the recent low here. And I don't know what's going on with why didn't that work? Okay. Let's try that again then. And you can see that we're getting this 2/3 retracement right around that 35 level as well. And we've got the declining 200-day moving average just up here at about 35.40. So again, it means that it's time to slow down a little bit. We had the first signs of distribution here in the semiconductors today in a short-term time frame when these moving averages started to crisscross. So it tells me that the big money's been made on this particular move, and we've had some real nice cyclical action in these semiconductors here recently. Just some real nice, movement from stage 1 to stage 2 uptrend, distribution, decline, stage 1, 2, and here we are at stage 3 again. So the market, is doing what it's supposed to. It's really not making it very challenging. And I don't mean to make it sound like it's been, you can just buy anything and make money. The point is, though, the market has been acting very well in here, and it's finding support where it's supposed to, near the 10-day moving average, then the 20-day moving average, and it's acting very strong, basically. Now, looking at the spiders, the SPY, we're approaching these highs back from May. So I expect any day now that we're going to, start hearing people calling this a double top. A double, it's not a double top any more than, this was a double top, or this, these two were a double top, etc. A double top is, it takes out, it finds resistance and then comes through support and then breaks down through that trend line as well. That's what will be a double top, and that would, if that were the case, we wouldn't have confirmation down until about 122, and that would give us a target down near 111 or so, the height of the double top subtracted from the breakdown point. I'm not calling for that. That's way too long term to even consider right now. I just only wanted to bring that up as an example of what a double top is and what a double top is not, because you're going to start hearing people talking about a double top. So anyways, let's take a look at some of these stocks we've had open. Bebe Stores had another great day, adding to the gains. So Bebe, we had been in at $21.45 on Monday, and that would be right at this level right here. Yesterday, I suggested putting your stop just below $22 a share, and that did not occur today. So now the market is getting, kind of extended in here. Again, I would say now we want to tighten our stops up significantly so that you can lock in as much of this profit as possible. Let's put our stop right below $22.80. So if you get stopped out there, that would be a $1.35 gain over the course of just a couple days. And that would be a nice move, obviously. ENZN. We had been in this one since Monday as well from $8.21. The stop was going to be at $8.28 today. That didn't occur. Let's raise our stop up to about $8.34 right now. Lock in about 13 cents if we're right on this one. It's kind of been a slow mover, but as long as we can keep raising that stop, the stock acts good. No reason to get out of it. Alexion, ALXN. This one I had mentioned last night to buy this one above 35.70, and you can see that did occur right in there. So our stop was then at 35.33, and I don't know why I did. I was showing yesterday's move, so let's redraw that. Above 35.70 occurred right in here, and then our stop was going to go in Alexion at 35.33. So we got stopped out of this one for a loss of about 37 cents. Small loss here, and at least we're not still holding it. I was kind of suspicious about this one just because it's options expiration week, and it just seems like a likely target for 35. Anyways, it was a small loss, so let's move on to the next one, which was China, CDC Corp. And what I had suggested was waiting for it to trade below $5.60, which did occur right here, and then to buy it on strength above $5.65. Our stop would then go at $5.51. I think you can raise that stop now to about $5.56. No reason to take too much risk in there. This stock really needs to get above $5.70. Above $5.70, then I think you can get going. But it acts good. We're just in it maybe a little bit early here. And next up we had HOKU. And HOKU, what was the low of the day in here? I had bought some, but it didn't do what I hoped it would, which was the low today was 376. What I was wanting it to do was to trade down to $3.73 and buy it there. Unfortunately, it didn't do that, so it didn't officially meet our entry. I was looking for a $4.50 target. The stock rocketed higher in here. I bought some early on, just a small position. I only bought 1,000 shares because it wasn't whatever. I just didn't feel completely right, but it worked out good anyways. And I'm not going to update that one again because it didn't really meet the parameters that I had laid out. Armor Holdings. This is one that we were the only short we were looking at, and it followed through nicely. Did what we were hoping it would do. Gave us our entry. The entry was to be, first of all, we were looking for the stock to trade up to $52.75. That did occur right there. We weren't going to sell short the strength because that's not the right way to do it. You don't want to sell short strength because a lot of times it'll keep going higher. Instead, we wanted to sell it short after it tagged that 52.75 level, and then on the way down at 52.55. So hopefully you were able to get some short off in there. If you were, I would say your stop now goes about 52.35, and I still think that target of 51.50 is attainable here. The stock came down right to S2 today as well, just something to keep your eye on and think about potential profits when it gets down there. A longer-term play that I wanted to update, back from July 11th and July 12th, if you go ahead and look at the archives there, I was talking about Safeway. And at the time, I had purchased calls in here on Safeway and had gotten out of the calls up in here. However, I said that investors would still want to hold on to this position. Well, it looks like it's time for investors to move to the sideline in Safeway as well. And I say that because the stock has made a lower low. And once it makes that lower low, it's been making these nice higher lows each time. It's made that lower low. I think it's now time to take your profits in there from about $25 to $30 a share, about a 20% gain. So for an investor, I'd say time to move to the sidelines. Nice trade, time to move on. That'll do it for now. If you're used to watching these on YouTube and you missed them the last couple days, that's because YouTube was having some difficulty. So I went to Google to upload my videos. And if you're a YouTube watcher, be sure to go to my blog, because that's where you're going to see them consistently, regardless of where I host them. And sometimes I just decide to throw it on a different service just to kind of mix it up for you guys and throw you off balance. And to keep you visiting my homepage as well. So thanks for your time, and I'll have another video this evening with fresh ideas for tomorrow.